Good morning, traders. Today is the 24th of February. My name is Neville Hornsey, market analyst YouTrading, and today I'm taking a look at the markets. Now, you may already have heard or seen on the news that Russia had started military moves into Ukraine. So it's a big risk-off day today. We can see that the euro is the weakest, the yen is the strongest currency, and that's closely followed by the world reserve currency, which is the US dollar. People will be moving their money out of the affected areas into these safe havens and into things like gold. If we look to the VIX, just looking at the VIX sentiment indicator, 99% of traders want to go short the VIX. And if we look to where we are, we're around the 33 level. Go to a weekly chart. We haven't been at this level since January 2021. Obviously, we've been taking out some swing highs. We could possibly go as high as 36. I really hope we don't go as high as we saw during 2020, during the pandemic, but we are at an elevated level, which means that volatility is high, which means the ranges are being expanded, which means that your stops are going to get tested, or you probably will have to either pick a tighter stop or at least reduce your position size to try and limit your risk, because the markets will chop through everything. What do I mean by that? If we go to the German DAX, so the German 40 on this, if I get rid of all these drawings, you can see that there's a big down move. We haven't seen a candle this size since the start of February, so 2020, sorry. So 2 years ago, we had the start of the pandemic. We had these big volatile weekly candles, starting to see them now. If we looked across here, we had several tests of the 14,800 level. And obviously this week we've broken through that. So going to a daily at 5 o'clock this morning, when Russia started, aggressively attacking Ukraine, we had a big sell-off. What you don't want to do is chase price. The idea is not to chase price if we look to the left, there's this imbalance here. And yes, the German DAX could go all the way back down, test these sort of lows around 11,500. I fully expect that to do that now. We've seen that this old support all the way back from March 2021, been tested several times, has now become resistance. Yesterday proved that. We saw a test of that. We didn't get as high as I wanted to. Essentially, I didn't want to chase price, but I did expect to sort of see a move towards 14,980, even to 15,000. So if I just put 15,000 on the chart, so ideally we would have had a bit more of a push up yesterday in towards the 15,000. That would have been a good psychological level to sort of trade off. It didn't get there. And today we've obviously, if you're asleep, you didn't see this move, and you've woken up to the DAX a lot lower. So again, we don't want to chase price. Volatility means that, yes, we're expecting the ranges to expand, but if we were to get short now, it could easily just retrace all that candle in a couple of hours, stop you out, either margin call or actual stops. So we want to test up into these sort of higher levels and then put our risk somewhere a lot closer. So if we go down to, well, actually, if I put a marker in on yesterday's low, if we go down to the 30-minute chart, so I think the low is here. What we want to see is some sort of news-led retracement, a bit of a relief rally. The algos just taken out all of the liquidity all the way up here. And then if we were to go for a short, get as close to the sort of area where we want to put our stop as possible. So maybe up here. So our stop can go there above the swing high. And then our target would obviously be a lot lower. So if we get that retracement and then we look to the left, depending on where you think the trade might go, if we were to go all the way down to 11,500, then the risk for reward is just insane. So it's like a risk of 1 for 11 on the reward. But if you were to try and get in down here, then the risk is just too great. Looking at gold, we've gone through the 1.618. I'm of the sort of opinion that once you break through the 1.618, you are likely to go a lot higher. So I'm thinking we take out the swing highs up through here, maybe test the 2018 here. There is obviously the 2.618 extension around 2040. That's into this green candle. Now, these guys were the last of the buyers in August 2020 before they got turned over. And we had the sell-off all the way down to 1680. So we'll be looking to see if there's still some supply up there. Obviously, there's geopolitical risk. If that escalates and carries on, then we could be going up towards the 2,200. Again, I don't want to chase price. I don't want to just buy now because it looks like a big green candle. What I'd like to see is return to yesterday's high, so 1910. We go back down to a 30-minute chart. So this is the level from yesterday's high. You can see that we've made a little swing low here. We could break that quite easily. Like I said, with VIX as high as it is, we could easily drop back down before going a lot higher. So I'm looking to see if we can get it in around 1910, put the stop below the lows of 1890 and yesterday's low, maybe even the 21st of February's low. And then at least then we're not risking, a good 100 points essentially. So yeah, theme today is to reduce your position size, to widen your stops, to wait for a better entry and not to chase price. Good luck. I'll speak to you again tomorrow.